What's going on, my fellow wealth creators? Matty Ice here. I am joined again, finally, it's been a while. It's actually been a while. Joined by my good friend, Jeff Kamke from Energetics, if I can talk right today, Jesus. We've got an important discussion today, something I think is very important to bring to people's attention and awareness, because it's often kind of brushed aside. We don't really think it's super important, especially when we're younger, kind of like life insurance. A lot of times people think, I don't have a family yet, or I don't have kids, or I'm not old enough. Nothing's going to happen to me. I don't really need life insurance. Well, we hear that a lot with estate planning. Now, we're not going to get into like super advanced estate planning strategy, guys, or super advanced estate planning in general. We're going to be talking about the basics, and we're going to share some personal experiences that we've witnessed, that we've seen when somebody passes away without basic estate planning in place, and just how devastating that can be, not just from a financial standpoint, but from a relationship standpoint, family, friends, etc. And it's just really sad to me, because there's some really basic stuff that we can put in place to solve all of that. A lot of us don't really need super advanced estate planning. And sometimes we think that, like, when we hear the term, I don't know if this is the case for you, Jeff, maybe we could start with this like as opening thoughts, but like when people hear the term estate planning, they think, oh, well, I don't need any of that because I'm not rich. That's for rich people. When they hear like trusts, for example, they automatically assume that that's something that the wealthy use. And that certainly is the case. But I would argue that if you have a freaking bank account, which most people do, you probably need to have some basic estate planning in place. All right. And what we're really going to be talking about is like wills and trusts, the difference between the two, some basic stuff you want to have in them, which one is right for who, right? Because not everybody needs a trust, for example, but we're going to talk about some of the basics of having an estate plan in place, because it's so freaking important, and it's not nearly as difficult as a lot of people think it is. Right. So that would be my opening thoughts. Again, Jeff, thank you so much for being here. I'm really looking forward to this conversation. Why don't you share some opening thoughts about estate planning on your end as well, and then we'll get into the details.
Yeah, for sure, Matt. Great to be back as always with you. I know last time we connected in person, we didn't have a chance to get any recordings in, so it's been a little bit of a drought for us, which is rare for us, but definitely good to be back together and share some good thoughts. I think my opening thoughts are, I've been through a couple scenarios with this personally, 3 really. Both my dad, my father-in-law, and my grandparents. So, I've seen a lot of the destruction, honestly, that can happen from it, and a lot of the chaos that can come from it. And it's just unnecessary. I think, as I was preparing for our chat today, I think a lot of it just comes down to, like the main title I put in my notes was irresponsible. I mean, it literally is, like you said, not that hard to do some of these things. And if you're just neglecting it, I'm going to be bold. It's just flat out irresponsible. Irresponsible for your immediate family, your extended family, your kids, grandkids, at whatever level it is. And so we're going to shine a little light on, I'm going to talk a little bit about my experiences and just some of the things that we've learned being in this space that are so important to take care of the risks that come with different aspects of life, different stages of life, because when you get to estate planning, there's certain things you want to have covered. There's certain things you want to be thinking about long before they're due, long before you think they're going to be a problem. I mean, I've got a young family, and I need to probably do more in this area myself if I'm being totally vulnerable about it. It's something that's easy to push off, like you said, to later in life, or wait till I get closer to having a health crisis or, an actual need. Then I'll get serious and put it in place, instead of being very proactive and being what we've been learning from Life 180 is planning for worst case scenario. Don't plan for best case scenario. And I feel like people that push off estate planning fall into that. I see it a lot with like the Dave Ramsey crowd and others, where it's like, I'm going to plan for best case scenario so I don't have to worry about some of this stuff, instead of planning for what if it happens tomorrow. Are you leaving your family in a really bad spot? And are you being irresponsible with, especially if you're a male? I mean, even if you're female, but I put a lot more weight on the guys to step up, take the right action, learn what you need to learn, seek out the right mentorship and professionals to help you put this stuff in place, because it is so pivotal for the reasons we're going to get into, and how it affects finances, how it affects family, and just overall well-being.
Yeah, 100%. That's a good opening. Yeah, I'm kind of in the same bucket where, I have stuff in place now. It's still not where it needs to be. So, we all fall victim to this. But at some point, that light bulb needs to go off, and we need to start taking care of this very quickly. Like, because you just never know when something like, life expectancy is going up, right? Is it likely that you're going to pass away? And I'm 37. Is it likely that I'm going to pass away anytime soon? No. Okay. But anything can happen. And from my own personal experience, getting this stuff in place, it's hard to describe the peace of mind that you have. It's like this. It's kind of like when you get your first life insurance policy. It's this weight lifted off of your shoulder. Because I think it's always in the background a little bit. Like every once in a while, you have this. Oh, like what would happen to my loved ones, to my kids, to my family, if something did happen to me. And then there's that moment where you're like, holy crap, I don't have anything in place at all to make sure that they're taken care of. And so the peace of mind that comes with this is hard to put into words, guys. I got to tell you. And like I said, it's not difficult at all. And I'm just going to throw a resource out there right off the bat, and I will link to it down below. I used trustandwill.com. And it cost me a couple $100 to get a living will and trust in place. And here's the thing is it doesn't even need to be perfect right now. You can, as life progresses, as life events take place, you update them. You can update your will. You can update your trust, take things in and out of it, whatever, right? We'll get into that. Right. But, a couple $100 and you can get this done. I really liked Trust and Will because it walks you through the entire process. It's state specific. I used ChatGPT, of course, to, for questions that I had. And, for a couple $100, I got it in place. So I'll leave a link to that down below, guys. That's just one resource. You don't have to do that. Obviously, too, if you're having a more advanced or not advanced, a more complicated estate where you have lots of assets, obviously consult a professional. All right. But if you don't have anything in place at all, you could start with trustandwill.com. The link that I provide gives you 20% off, and it's so worth it. Okay. So let's, what I'd like to do is let's set the stage with some of our own personal stories, seeing what happens when people don't have a basic will and maybe a trust in place. I'll share a recent story, and then I'd love to hear yours in more detail, Jeff. And actually, I've got multiple, but I'll start with this one. I was talking to a longtime friend of mine. She actually used to be a client in the salon when I was a barber and hairdresser. For those of you that didn't know, that was my previous life. It was a lot of fun. But anyways, I was talking to her, and it was just so unfortunate. Number one, when a loved one passes away, that in and of itself is such a huge loss. It's so devastating. And unfortunately, this was 2 years ago now. Her husband passed away in his sleep. They think maybe it was sleep apnea. I'm not 100% sure, but he wasn't that old. He was in his mid 50s. And when you looked at him, he was in pretty decent shape, looked like he took care of himself. And then one day, gone. He just didn't wake up. And what was so mind-boggling to me was, he was pretty successful. He had lots of assets. They had a really nice house. They had a boat, cars. He had a successful, some type of financial practice that he had, a business. And he had no will, no trust, nothing in place. And guys, do you know what happens when you pass away and you don't have at least a basic will in place? The state decides what happens to not just your assets, to your children. Who gets assigned guardianship of your children as well, if you have not laid that out? And so when I was talking to her, unfortunately, the families are still fighting. 2 years later, they're still fighting over the different assets and resources in the estate because he had no plan in place. He had no directive to say, hey, this person gets this person gets that. I want this person to take care of my dogs or whatever, because the kids were grown by then, all right? But how many people pass away with that still have young children as well. And now you're going to let the state decide what you've worked your ass off your entire life for and what's going to happen to your kids. Now, it's not some nilly-willy thing like, well, they're just randomly assigning guardianship, right? There's a process, to make sure that the best guardian is assigned to the kids. But I don't know. Correct me if I'm wrong, Jeff. I mean, I don't have kids, but I would think that that's a major decision that you do not want the state making for you. Who's going to take care of your kids if you were to pass away? That's crazy. But the 2 years later, the family is still fighting over assets. And what does that do to the family too? Like, imagine if he had a will in place, and it would probably make sense for him to have a trust as well with the amount of assets that he had. But if he spelled out in detail who gets what, there is no fighting at that point. Now, well, I don't want to get into too much detail just yet about the will. We'll finish up with the personal stories, and then we'll go into details about how these a little more detail about how these things work. But guys, that's just one example. I have plenty more that I've witnessed personally, like just the devastation that this can cause, the confusion, the stress on top of already losing a loved one. And all you had to do was put a simple will in place. Like, it's not that difficult. All right. So that was a recent story that kind of set me. I mean, I was already looking into estate planning and learning more about it, but I was like, okay, I'm hearing this and seeing this too frequently. This needs to be a point of contention now and a major part of the channel now, because apparently so many people do not have this in place. So that's one of my stories. Jeff, would love to hear your experience with this.
Yeah, for sure. I think my biggest one was when my grandfather passed away in 2018, I think it was. And all through when I was, still in high school, I can remember going out and visiting my grandparents. They lived 20, 25 minutes away. So relatively in the same town. I'd go out there a lot of times on Sundays and visit them. And I can remember, when I got to be 17, 18, 19, somewhere in there, my grandpa would start talking to me about like everything you need for, someday when I pass away is in the safe. Everything you're going to need. You know that, we don't need to go over anything. Just know that it's in the safe. Here's the code. You're good. Well, fast forward all those years later, another 10, 15 years later, comes down to where he goes to a nursing home. We go to the safe. The safe is literally empty, Matt, like literally empty. We have no idea what happened. We don't know if he did something. We don't know if caregivers came in, did stuff with it, but we literally had nothing. Fortunately, we knew who the attorney was. He was somebody locally that, we were affiliated with through church. Ultimately found out, what generally we needed to know, but we also found out that everything he told us was in place was not in place. And so there were some things done, but not all things that needed to be done. So I was the only grandchild. I was to get the house. There was even things with that were not completed, a ladybird deed and some different things that needed to be done after the fact that caused a lot of issues. And then when it came down to him actually passing, there was just a lot of undone things. And what looked to us all down through those years as everything's taken care of, you guys won't have any stress, everything's just going to be super smooth, I've handled everything for you, turned out to not be that way. And we ended up having to go through a lot of the traditional processes where things had to get looked at. And I don't think we ended up having to pay anything through probate or anything, but we still went through that. And I can tell you what, my family's small. It's me, my mom, at the time was my dad, he's now passed, and my aunt. That was it. And we've never had family issues. We've never had disagreements, things that have separated us or, put a wedge in the family. This process put a wedge in our family. It was unbelievable to see and witness the difference of opinion, who we had handled what order we did things, who was responsible for what. It brought out the worst in us. It was kind of crazy to see that firsthand. And my story is very mild compared to what you hear out there, where people literally will never speak to family after going something or through something like this. So that part was very stressful. There was not the assets left over like we thought. A lot of those had to get spent down and drained. Pretty much, at least here in the state of Michigan. I don't know a lot about this other states, but I know in Michigan, you could keep a house, you could keep a car, and I think like $10,000 in the bank was like all that he could keep in order to go on Medicaid for him to live out his final years in the nursing home, because he didn't have long-term care. He didn't have life insurance. He had none of those tools that we now know are very critical to handling that that risk at the end of life of if you need long-term care, what are you going to do for it? There was literally nothing in place for that because it was, quote, too expensive. He didn't want to do that. So it ended up the things that my grandfather worked for, his dad and his grandfather worked for. There was 3 generations that worked on a farm, and it came down to there was a rundown house, a 10-year-old car, and about $10,000 that was left to hand over to the family after 3 generations of work. And I had just started getting into what we're doing now around wealth strategies, learning about life insurance, learning about a lot of these things. And it was just so unfortunate to see, basically 100 years of hard work in the fields, milking cows, doing crops in 100 degrees in July, all those things that came down to like lack of planning. It somewhat tore apart our family, at least for a period of time, and financially did really nothing for the rest of us. I mean, it did a little bit, but it wasn't, what it could, or in my opinion, should have been with proper education, proper mentorship through something like this. So that's my one glaring example. Probably as we move through some of the things, I'll share more about my personal, family story with my dad after he passed and some of the lessons that we learned of what to do. But I'll save that for when we get more to the positive things of what we need to put in place for this. But yeah, that was very much my experience, and, kind of shocking at that to go through it firsthand.
Yeah, it's totally different when you go through it firsthand. I'm sorry to hear that, man. That's really sad, because I think part of it too is just that everybody's so emotionally charged up because of the loss. Like everybody's grieving and stuff. And when you're in that state of mind and there's no plan, and now we have to make major financial decisions about what happens with the estates, like it's not a good position to be in whatsoever. It's not a good position to put your family in at all. And yeah, like some people think that this isn't going to be an issue because, I got stuff stashed away in the safe, or, I've got XYZ. I've written it on a napkin. I don't, whatever. It's like, no, there's a formal process that you need to go through, and it's really not that difficult to do. And if you don't have that, everything can be contested. And that's when people start to fight. And it takes forever to go through probate because the court is having to decide what happens with everything. If there's anything left at all, in your example, unfortunately, everything was spent down so he could get Medicaid. It's like, man, that's really sad because, like you mentioned, with proper planning and some, a little bit of financial education, that could have been totally avoided. And he could have passed on a much more significant legacy in a much more efficient way. Right. It's really sad. My stepmom passed away a little over a year ago, and it's been similar. Fortunately, there hasn't been like a ton of fighting among the family, but there's been a lot of confusion and a lot of pressure on the executor of the estate, which is my stepsister. And, she's been amazing for stepping up and handling it, but like trying to figure out what to do with everything. Like, oh my gosh, the amount of pressure that puts on somebody. And they just have no idea where anything is and who gets what, and it's just a nightmare. And it's still going on over a year. They're still going through probate, trying to do certain things with different assets and stuff. And it's just like, man, put a basic will in place. That's all it takes. At least that's the starting point. So, yeah, with that, why don't we start to get into some more of the finer details about how these things work and the benefits and how to put these things in place. What specific things you might want to consider putting into a will or deciding if you need a trust. Let's start with wills first. I want to start with wills and medical directives, powers of attorney. Okay, so there's a couple of different parts of the will here. And also one thing that I want to mention too, like sometimes this is a misunderstanding. People think that if they have a will that whatever they have with the will avoids probate. That's actually not true. I didn't know that until I started going down this journey. A will just tells the court what you want to happen. So the court, it still goes through, your stuff still goes through probate if all you have is a will. But it is a lot cleaner. It's a lot easier. It's a lot more efficient because the court just looks at it and says, hey, Jeff wanted XYZ asset to go to this person. Okay, it goes to this person. That's it. There's no contesting. There's no confusion. The court doesn't have to make a decision on who gets what. It's no, here is the will. Because if you pass away without a will, the state actually has a will for you. It's called I believe it's called an intestate will. I think I'm pronouncing that right, where the court decides what to do with your assets. But when you have a will, that still goes through probate. but it's much, much easier because you already have everything written out. So I just want to make that point clear. Now, with the will, all right, so we have wills and then medical directives, which I think is really, really important, and then like financial powers of attorney. Okay, so let's start with the will. For me, and we'll get into a little bit more detail about like when it makes sense to put something in a trust. But like, I guess we'll start with this, Jeff. What do you see as like the basic things that people need to point out in a will, in your experience? Like, what do they need to be putting in the will when it comes to assets, number one, but then the second main part of the will too is guardianship of children, right? What's your experience with that? Like, what are the main points that you see that people need to hit?
Yeah, I know, after my dad passed, I went with my mom to the attorney that she had working with everything. And she wanted to make sure that everything was set up at that point. And I know for her, it was, she didn't have a ton, but it was making sure that like bank accounts were accounted for. And some of this stuff, according to the attorney that we met with, can actually be handled almost in the order that it goes through when you get to that point of, a probate scenario. If there's a beneficiary listed on something, that even supersedes the will. The beneficiary comes into place first.
Right.
And then if there's not a beneficiary, then it goes to the will. So I know in my mom's case, she was able to handle literally, I think every single thing that she had through a beneficiary. She didn't really need to have a will per se. Now she still has one. So it can mean bank accounts. It can mean, retirement accounts, investments, your home, making sure that your home is listed is what, to be done with that. Outside of that, it depends on the situation. If there's businesses involved, if there's, other forms of assets, if you own real estate as an investment, I mean, a lot of those things you're going to want to figure out. Obviously, children, and if there's any dependents, involved, you're going to want to know and think through what's that going to look like. Again, I'm not an expert on all of these things, but I know just from personal experience, those are some of the initial things that you want to make sure, just that the low hanging fruit, the things that you probably don't even think about, like your bank account. Do you have $10,000 in your savings account or your checking account? Who's that going to? What's the plan for that? Do you have a Roth IRA? Do you have a mutual fund? What's going to happen with that? And if it can be handled at the beneficiary level, I know for my mom, it was a matter of filling out some forms and adding me to her things as the beneficiary. It was that simple, right? If you have a life insurance, making sure your beneficiaries are included on there and updated. I think, as I was preparing for some of this and thinking through some of the scenarios we've been through, updating the plan is so important. My aunt has been really good with having all this stuff in place for a very long time. And I know every few years she'll come to us and say, hey, we need you to update something and sign something. She got married in the last couple of years, so she needed us to sign some new stuff and update it because your life does change. If you're younger, you're going to have kids probably at some point. If you're older, and middle-aged, things may change with career. Things may change with spouse. There's a lot of things that can go in a different direction from when you initially set things up. And so you always want to be reverting back to meeting with somebody. I don't know if it needs to be annually, but I would think at a minimum, at least every 3 to 5 years, so that you're getting everything up to date and making sure that it's following, what you have in place. So those are, I guess, the low-hanging fruit that come to my mind, Matt.
Yeah, no, that's great stuff. So yeah, the beneficiaries is a really good point because some things like you don't even need to really mention in the will, so to speak. Like so what I have will, a trust, but then I also have what I call my peace of mind planner. It's like an organizer that just has all of my accounts, my life insurance policies. It lists out all of my assets, passwords to this and this and whatever. That way, the executor of my estate knows where everything is. So that's one part of an important part of the will is naming an executor to your estate. Like, who do you want to handle all of this stuff? Like, obviously that there's a lot of thought that needs to go into that. It can be a family member, a close friend. It might even be a law firm as well. Like you have a lot of flexibility who you can name as an executor to handle the estate. So you're naming the estate, but a lot of these things, a lot of assets, you actually don't really need to mention in a will. You just need to have it organized somewhere so that the executor knows where it is and knows how to handle it. You were mentioning like bank accounts, for example. You don't really need to tell the estate what to do with the like within the will with that bank account, because you can just name a beneficiary on the bank account, and as long as the executor knows that where that bank account is, they just provide a death certificate, and then the beneficiary gets paid out. It's exactly what I did with my father when we set up his will. I was like, well, he really, all he had was like a bank account. He's got a small pension, but we wrote out some things in his like his personal assets, like his keyboards, his music, and stuff like that. We put that in the will, like who he wants to go who he wants to get those things. But the bank account, we just added me as a beneficiary, and that's it. You just provide the death certificate, and you're good to go, right? So with the will, naming the executor, and then finding out, like, with these different assets, can you name a beneficiary? Like a bank account, your retirement accounts, usually you can, life insurance, obviously, like anything you can name a beneficiary on, I would recommend definitely doing that. Now, where things can get a little bit more advanced, I guess, is like if you have younger children, do we really want to name them as a beneficiary on a bank account? Probably not. That's where trust can start to come in. We'll get into that in a minute. All right. But naming an executor, all right, pointing out like who you want to get personal assets of yours that you can't name a beneficiary to. Okay. So for example, if you have a really beautiful china set, if you have musical instruments like my father, right? Things that are important to you that you want to make sure somebody specific gets. All right. Anything like that, you can put, you want to put in the will so that there's no confusion around it whatsoever. And the executor knows what to do with those assets. Okay. So that's a little bit that touched on beneficiary stating in the will. Next, let's talk about guardianship. All right. Children. I think this is we'll talk about the guardianship, and then we'll get into the medical directives and powers of attorney. But I think this is really important, guys. A big part of the will is making sure that if something were to happen to you when you still have young children, that you are going to name who's going to be the guardian of your children if you were to pass away. Now, this is obviously a very serious process, a serious conversation that you need to have with the person. You don't just drop this in the will without letting them know, and then all of a sudden you pass away and they have kids to take care of all of a sudden. Okay, this needs to be somebody that you trust, that you have an in-depth conversation with, that you lay everything out. Okay, we don't just put them in the will. All right, but this can be very important because you don't want your children being raised by somebody that you wouldn't want to be raising them. Like, for example, if you have family members that maybe just, they're good people, but they would not make the best parents. Maybe it's like a close friend of yours that would make a really good parent for your kids if something were to happen. Well, if you don't have that in the will, the court might determine that your kids are better off with your immediate family, even though they might not be the best parents to your kids. That could happen. Probably happens all the time. Right. So spelling out, like, first off, really thinking about who would I want to take care of my kids if something were to happen to me? Are they open to that? Is that a responsibility that they are willing to take on? And then having a conversation with them. And if they agree, then that's absolutely something that you want to put in the will. So any thoughts on guardianship before we move on to the medical directives and powers of attorney, Jeff?
Yeah, Matt, I think, for me, I've got a 10-year-old son and almost a 7-year-old daughter. And, for us, that's been a big thing. And, we've looked at, I don't have brothers and sisters, so I don't have anybody on my side that's really going to, take over. Now there's 2 grandmas that could take over. But, on my wife's side, there's one brother that we see eye to eye on a lot of this stuff. We have the same opinions about health and how to take care of things. And there's a very similar mindset around, career and just a lot of things. So it'd be like the ideal, place to have our children, if something were to happen to us, be raised in. And I think part of that discussion for us was, we've got life insurance, both my wife and I, we've got a lot of life insurance so that if something did happen, it wouldn't be like that family would be having this major financial burden. We would actually be providing the financial means for them to raise our kids, plus give them quite a buffer. So I think that's part of the strategy, is not only the will, but having – that part. If you do have children, what's the plan for financial needs going to be for them, and having that in place as well, if it's term or whole life or whatever that looks like, by handling that financial piece, because that was something that was big for us to say, hey, if you take on our kids, you're also taking on a very sizable death benefit that will literally take care of our kids for the rest of their life if you follow these steps, right? So for us, that was the big thing, in making sure that, yeah, not only they're covered from, the directive aspect of guardianship, but then the financial piece of that as well. Don't forget about that. It's one thing to know, like, if it happened, my kids are going to a good home, but also planning for the financial aspect of it. So you're not placing a major financial burden on a family that's taking on your kids, because that's going to come with it.
Yeah, 100%. That's having life insurance in this process too, or a means of providing financial resources to the family or the people that would be raising your children, is so important, because you definitely don't want them to be a financial burden on them. And it's a beautiful thing that they're accepting to do for you. The least we can do is try to provide some financial resources for that, and that's actually where a trust can come into play as well, because maybe you don't want to provide a massive death benefit right off the bat in one single instance, to this family. Maybe like you want those funds used in a very specific way, so you can actually make your trust the beneficiary of your life insurance policy, and then you can direct inside of the trust how you want that money spent. Let's say you have let's say you provide a $100,000 death benefit. Hopefully it's more than that, but we'll just use simple math here. All right. And you want 10,000 of that to be used for their first car. And then you want 30,000 of it to be used for their college education. And then the remaining can be used for a down payment on a house, maybe their wedding, whatever. Like, you can spell all of that out inside of the trust as well. It's so freaking powerful, right? That's why having these things in place is so important. But before we dive into too much of the trusts, I want to finish up with medical directives. I think this is really important too, because if, God forbid, something happens to us, we get sick, or maybe we're in a horrible car accident, or like just anything can happen, guys. Who do you want making the decisions? Who do you want making your medical and financial decisions if you are unable to make them on your own? Have you ever thought about that? It's a little eerie, but again, the peace of mind of having this in place, it's just all this weight gets lifted off your shoulders, because it can happen, right? So that's why it's one of the reasons I love trustandwill.com, because they made this process just so freaking easy. But you spell out in your medical directive, like, hey, like, do you want to be resuscitated? Do you want to be an organ donor? How long do you want to be on life support if you're in like some kind of vegetative state, right? Like, you get to spell out what happens to you if you are incapacitated, if you can't make your own decisions. And it's just this guiding light for this guiding roadmap for whoever is going to be responsible for those decisions, so that they don't have to figure out like what would he or she want in this moment, like what would be best for them. No, you spell it out, and maybe even give a little bit of leeway to that person as well. It's like say, hey, this is generally what I want. I want, if I am in a vegetative state and I'm on life support, give me 60 days, 90 days. If no reasonable progress has been made, then it's time to cut the cord. If there's been a little bit of progress, but it's still not looking good, then I leave the decision to whoever has that responsibility, right? You can get very creative. It's all about what you want. Do you want, or do you not want, specific types of medical treatment? Right? You could put that in your medical directive as well. But what you don't want is to become incapacitated and not have a voice, and to have the state be your voice, or doctors that you've never met before to be your voice in what happens. Because there are some states, every state's a little bit different, but in some states, even if family is there, if you don't have a medical directive in place and the family is like completely opposed to what the doctors want to do, if two physicians come together in some states and say, nope, this is going to be the best thing, or they're just never going to recover, so we're going to pull the plug, even if the family doesn't want that to happen, that could still happen. All because you didn't have a medical directive in place. All right. So the states and like complete strangers will step in to make these major decisions for you if you don't spell them out very clearly. All right. And it's very similar with financial powers of attorney as well. You know, like, especially if you run a business, I mean, you don't even have to run a business, but like, what happens with the money? What happens with the business that you have or whatever? How do bills get paid? Like, because the bank doesn't care if you're incapacitated. They just want to know that they're getting paid every single month. The payments don't stop just because you all of a sudden can't make your own decisions, right? So having a financial power of attorney, who do you trust to make financial decisions on your behalf in order to manage the current situation? Maybe there's medical bills piling up. Like, where are we going to get the money to pay for that? Like, if you have those resources, but no instructions on how to disperse those funds and resources to take care of everyday life and to maybe get alternative treatment as well, like, now you're just kind of stuck, right? And it's not a good situation to be in. It's not a good situation for your family to be in. So that's my just quick 2 cents on medical directives and financial power of attorney. Any thoughts on that, Jeff?
Yeah, I don't think too much more. I mean, I think you hit on a lot of the key points there. I think, the big one for me that I saw with my dad wasn't necessarily directly this, but it was also just insurance companies can also direct what happens to care based on, the plan you have and those types of things. So it may not directly correlate with this, but I think there's probably some influence there above doctors that can be from insurance companies on, what happens to a loved one and, just handling all of those aspects because it's something that you usually don't think about until you're in the thick of it. And then once you're in the thick of it, it's very confusing. It's very overwhelming. You usually don't have time to even react or pivot or do due diligence. You kind of have to let it unfold. And then it's after the fact that there can be a lot of regret that sets in of like, man, I wish I had this thought through. Wish I thought this had this planned out. I wish that this would have went differently. My loved ones still might be with us if things would have went differently in all those scenarios. So definitely make sure that that's something that gets handled because it's sad when you go through it and you kind of feel like you've lost your power to, have a loved one with you or not.
Right. Yeah, that's all things to think about. Let's touch a little bit on trust here. Jeff, do you have a living trust?
I do not yet. I'm really not at that point for needing one, but we'll hopefully be needing one in the nearest future.
So let's start with that. How does one determine if you need a trust or not? If I asked you, like, what's the difference between a will and trust, and how do you know if you need a trust or not? What are your thoughts on that?
Yeah, I think my understanding with trusts are basically, once you have enough of a net worth or enough assets, things that are above and beyond what a beneficiary would take care of, like we've already discussed with like bank accounts or basic assets and investments, it'd be kind of that threshold that you would kind of need some other documentation, some other legal structure in place to know what to do with these bigger, assets or bigger things. That's my understanding. That's certainly not a technical definition because it's not my area of expertise, but, you obviously have to have enough income, enough net worth, enough assets, enough, things in business or otherwise to warrant the need of that extra structure to handle things legally so that it's going the way that you want. So I'll throw it back to you for, your thoughts on that because I think you're a little more well-versed on that than me. So.
Well, I'm certainly no expert, but no, that's a good stuff to start with. Yeah. So with trust, that's definitely a part of it. Like as you start to acquire more assets and you're not naming direct beneficiaries, then putting assets into a trust can definitely be beneficial, like to disperse those assets later on. What I really like about trust, number one, they're private. They actually avoid probate. They don't go through the court system. So if there are assets that you have that you just want a successor trustee is what it's called, to disperse those assets and you want to avoid probate, then a trust is the way to go because trusts are completely private. They're outside of the court system. So I really like the privacy aspect of a trust as well. But the other thing I like is you have a lot more control of how the assets get dispersed. So when you're naming beneficiaries and you're putting things in wills, you are directing who gets these assets, not how or when, right? With a trust, it's completely different. So we were talking a little bit about earlier about guardianship and providing financial resources for kids to whoever's going to be raising your kids. Or pets as well. I know people that do this for pets as well, because our pets are like our kids, right? Who do you want to take care of your pets? So, but with a trust, like that example I was giving earlier, where, let's say you have $1 million death benefit. Like, do we really want to drop $1 million into somebody's bank account right off the bat? Probably not. That's probably not a wise thing to do, regardless of how much you trust them. That's just a lot of money. A trust allows you to spell out how and when those assets, those resources get dispersed at specific life events, or, you could have it almost be like your own little private family bank. We talk about that a lot. Like if your child, let's say they're 25 years old, they want to start a business and they want to get a business loan. Maybe you allocate a certain portion of funds to help them start a business or buy real estate or whatever it might be. Right, you are in full control of how those assets get dispersed. So those are really my two favorite parts about the trust, is the privacy and the how and when that you get to dictate with those assets. Right, because dropping a bunch of money into somebody's pocket right off the bat is not always the best thing. It depends on who it is, of course. Everybody's situation is a little bit different. All right, but that's something that's something to consider. And here's the thing about the trust, guys, is typically we're setting up revocable, like living trusts. All right. So we are still we're actually the trustee of that trust. We're in full control of it. So you get to determine what gets put into the trust, what gets taken out of the trust. You can update it as you wish. And then when you pass away, that's when the successor trustee, it's very similar to the executor of your estate. When you mention them name them in the will, a successor trustee is pretty much the same thing in a trust. So when you pass away, what do you want that successor trustee to do with these funds, these assets, right? And there's you could put a lot of stuff into a trust. Sometimes it makes sense to put things into trust. Sometimes it doesn't. That's not really the scope of this video. All right. But those are just some of the main reasons that you might want to start considering a trust and it's really not too expensive to maintain, depending on how you do it, depending on how complicated your estate is. Like, I just have my trust through trustandwill.com. And I pay, I don't know, $50 a year to do updates to it. And that's it. Like I said, it was a couple $100 to set up, but now I'm in control of what gets put into that trust at any time. And just having that flexibility, like as I start to acquire more assets, like as soon as I do, just right into the trust, or not, like I don't put everything into my trust, but as you start to acquire more assets, a trust can be a very, very powerful part of your estate plan. So those are just some of the differences between the wills and trust, guys. Obviously, there's a lot more to it than that. Keep doing your research. This conversation is really just about putting this on your radar, bringing it to your attention so that you start working on it. It gets something in place, guys. So I think that's about all I had on my notes here. We covered just about everything, like the main things that I wanted to cover. Was there anything else that you wanted to bring up, Jeff, or you think is important with regards to an estate plan?
Yeah, I think, as you get big picture with both of these things, the wills and the trusts, I look at like what you were just talking about, the level of control and flexibility that it brings. And I think the people that resonate with both of our messages, Matt, they're somebody that's looking for more control, somebody that's looking for more predictability in what they're creating in their life. And not only does the life insurance give you that, and annuities and a lot of the other things that we do talk about on a more regular basis, but the trusts and wills give you more confidence, more certainty, more predictability in what is going to happen for you. And really where that's significant and plays in is your day-to-day thought process. We already have enough going on in our life. We already have enough things that cause stress. And I can tell you, when you don't have this stuff handled, there is always that in the back of your mind. What happens if X? What happens if I get hit by a car on the way to work? What happens if, knowing that things aren't handled appropriately, I know that I'm leaving my children or my family in a really bad spot. That's there to some level. Now, for some people, it may not really be at their awareness, but if you're a parent and you care at all about your kids, that's weighing on your mind and on your heart to some degree, versus the difference of when you have that stuff handled and there's just that confidence in knowing it does not matter if something bad happens to me. I know, at least in these regards, my family's taken care of. My kids have a path forward. I know where they're going to be. I know who's taking care of them. I know what kind of money is going to be there for them. Everything is drawn out, and that just takes a weight off. And that allows you, in my opinion, and I know Garrett Gunderson agrees with this kind of thing as well, and probably you do as well, Matt, that allows you to go out into your life and create with more freedom and more power, because you're not held up on the things that are stressing you out and the things that are burdening you. You can actually go and set forth with a greater vision, with greater clarity, because you know that these things are taken care of. So that's one of the big things. And I think the other piece that is always near and dear to my heart, and I think I bring this kind of angle to the discussion every time we talk, Matt, is, for me, big picture, seeing my grandparents go through this and knowing what we dealt with, I've already outlined at the beginning of our discussion here, was, I think if my great grandfather had this kind of knowledge and put it in place for his son, and then for what would have been his grandson, which was my grandfather, if all of that knowledge was handed down and every generation had the capacity to up level, if one generation could create, I know with inflation, the dollar amounts aren't quite comparable, but let's play like inflation isn't real and doesn't exist. If my great grandfather created, $500,000 worth of net worth, and that got transferred to my great grandfather, and he was able to take that $500,000 and blow it up to $1 million net worth. And then my grandfather came along and made that a $2 million net worth. And then that went to my mom and my aunt, and then to me, and we were able to perpetuate that wealth. I would be in a much different place right now financially, in having knowledge that I didn't have to acquire myself. It would have been passed down generationally. So not only is, to me, estate planning and life insurance, financially, it makes sense. It makes sense to help your family ease the burden of transition from one generation to the next when people pass away, and avoid probate and avoid all the stressors that we've already outlined. But to me, there's that higher picture to it all, of allowing the next generation to start on the shoulders of what you've already built, not having to start over at zero, not having to figure it all out again. Because, I look back at my few generations before me, it's like nothing has really changed. We haven't learned the lessons yet, right? We're still making generally the same mistakes. We're still making about the same amount of income. We're still generally living about the same kind of lifestyle. And I don't know about you, but for me, that's not okay. I want to advance more. And then we live in a society right now where if you stay the same, you're falling behind pretty rapidly. You have to be growing to stay ahead of the forces that are against us. Inflation, taxation, decisions that are made outside of our control. So that's where my heart is with this stuff, is that it's allowing our children and grandchildren to be able to thrive in a world where there's constriction and there's things and forces upon them that are wanting them to succumb to governmental control and a lot of those things. And I'm not trying to be conspiracy. This is just real. This is, you can look around, this is what's happening. And so the decisions that we make around wills and trusts and life insurance and financially have a big impact on how our children and grandchildren are going to live and the life that they're going to be able to have. And are they cutting back and scrimping and living paycheck to paycheck? Or are they able to thrive in their purpose? Are they able to go out into the world and create from a place of certainty and control and flexibility, knowing that the financial piece may not be totally taken care of, but it's pretty solid, right? So for me, that's my big message with all this stuff that's near and dear to my heart, that do these things not just for the financial part, not just for the family part, but for the bigger purpose part of, what is your family's vision? And maybe you've never thought about some of these things, but as we speak to them, maybe it's something like, man, I want to dig into that. And I would encourage you to do that, because I think there's more to just going to work, doing the same old, repeating it generation after generation. I think we're here for more. I think we're designed for more. I think we're here to accomplish more and impact more people. And these are a lot of the tools that you can put in place to be able to do that.
100%. So well said, man. Yeah, just a couple final thoughts on that, because now you got the creative juices going again. Just a couple things that I'll wrap up with. Because estate planning is really where you're able to build the generational wealth, right? So a lot of times we're, of course, we're focused on building as much wealth for ourselves and our families during our lifetime as possible. But estate planning is where you really start to pass the baton and continue, to continue to compound the wealth building process in your legacy, right? For future generations. And sometimes the way I think about it is like, what we do now, what we're creating certain things in our lives right now. We're building a business, or we're building wealth, right? And that's great. Okay, but estate planning and when we start combining wills and trusts and life insurance, like you mentioned, now we start to create beyond our own lives, right? So I love creating and building stuff right now. It's a fun part of life. But what if we were able to actually continue creating and building even beyond our physical life here when we pass away? And Garrett Gunderson talks about this a lot in his book, What Would the Rockefellers Do, which I highly recommend for people who are like really interested in estate planning. What if you made your trust the beneficiary of your life insurance policy, and then within that trust, a portion of those funds is used to purchase another whole life insurance policy, which is exactly what the Rockefellers do. He talks about in that book. You then use some of those funds to purchase life insurance on the next generation. And then maybe what if the only way that they can access that, like to access the policy, like we talk about all the time on this channel, is they need to pass a test, a financial education type of test that you put together. And only when they prove that they understand these things, if they have to get 100% score, they got to get every question correct. Okay, before you will release this policy or you'll release these funds, like you're still creating even beyond your own life, because you're putting these specific things in place that in order for you to receive these funds from the family trust, you need to demonstrate that you have learned these principles as well to ensure that it continues from generation to generation to generation. I believe Garrett Gunderson calls it the family constitution. It's such a cool thing. It's such a cool concept. It's a beautiful thing that allows you to create beyond your own life, guys. So it's really, really cool and just fascinating stuff when you start to go down this journey. Obviously, at the very least, we want to make sure we got to start with the basics, obviously, before you get to that part. All right. But just like start with the basics and see where that takes you, because there's so many cool things that we can do with this, but you got to take that first step, guys. All right. So start looking into the wills and trusts. Go through the link in the description, get a discount for like a basic will and trust to put in place, and then you can build off of that. Okay. So go ahead and wrap up with that. As always, Jeff, I always enjoy our conversations, man. Let's make sure it's not a few months before we do another one of these. This kind of stuff I think is just really important for us to get out there, because a lot of times for a lot of people, this isn't even on their radar at all. So, and of course, as usual, guys, I'll link to all of Jeff's, websites, resources, all that good stuff. If you want to connect with him down there, he's got a great YouTube channel, Wealth Energetics. Make sure you check that out. Until then, be good, guys. Hope you're crushing it. Jeff, again, thank you so much, and I'll look forward to the next one.